The results here are provided for general information purposes as a convenience to you, the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. This is not a solicitation to buy or sell any security ever. This is not advice. The first upgrade to the Backtest tab is here, the Saved Backtest drop-down menu. If you click on it, you will see every strategy from the Today tab, plus 4 new ones with our AI implemented on top of it, so that you can automatically call a strategy and look at it and start testing it instantly without going to any other tab in TradeMachine. I'm going to start with the 14-day pre-earnings long call. You load the strategy. It will take a second to load the ticker. Okay, we are looking at this phenomenon, which is getting long a call 2 weeks before an earnings event in certain companies, and getting out of that call before earnings happens in order to take part in the pre-earnings optimism in stock prices. So the call rises in value as the stock prices rise in value with this pre-earnings optimism without taking an earnings risk. But here's the thing. Remember earlier I said effort. Effort in this case is a willingness to look at something that might be unfamiliar. And rather than allow your urge to replace that unfamiliar thing with something that is familiar, instead you decide to put in the effort to learn the unfamiliar thing. In this case, I mean the difference between just buying a call, which is easy, and understanding the realities of option trading. First, an option can only be hedged by another option. And second, option trading is volatility trading, whether you mean it to be or not, so you might as well mean it. The next upgrade on the Backtest tab is portfolios. Every TradeMachine member has all of these portfolios built in. You can add as many extra portfolios as you like. There is no limit. You can add 500 portfolios if you like. But every TradeMachine member automatically has these. The NASDAQ 100, the Dow 30, and then the groupings in the S&P. So financials, technology, utilities, basic materials, industrials, healthcare, etc. The Magnificent Seven, mega banks, top ETFs, and then just software companies from the IGV ETF. Now in the background, I took the NASDAQ 100 and I did the pre-earnings long call. And we're seeing what is familiar, a long call, and seeing how it performs. And then we're going to have to look at something that may be less familiar, that requires effort, to see why, when I said that an option can only be hedged by another option, and option trading is volatility trading, whether you mean it to be or not, so you might as well mean it. And here's why it matters. We can still take advantage of pre-earnings optimism, but some edge has been removed from the market, and I'll tell you why in a second. First, I'll show you how to improve it. Over the last 3 years, getting long a call for 2 weeks before earnings, which used to work phenomenally well, has done basically nothing. Average trade of 1%, which might as well just be commissions. So let's start filling this in. A pre-earnings call, which we just have right here, has a win rate of 43.13%, 289 wins, 381 losses, and an average trade of 0.98%. And that's over 3 years. Let's remember that. In fact, let's take a snippet of it so we can compare it to what we're about to do. And I'll put a little check mark here so you know I'm not fudging the numbers, okay? Now, let's go to Saved Backtests and go to the pre-earnings diagonal. This is before we go to the pre-earnings diagonal AI, okay? Pre-earnings diagonal, we'll let it load. It will load a single ticker. We'll go back to portfolios and we will do the NASDAQ 100. And here we go. Because we were willing to do something slightly less familiar, instead of just buying a call, we bought a call and sold a call. We now get these numbers. We went from a 43% win rate to a 52% win rate, and most importantly, went from a trade that was basically break even to a trade that made 12% a week. We've shortened the holding period, used one option to hedge another option, to take advantage of the same phenomenon that stocks have pre-earnings optimism. So let's fill in the spreadsheet. The win rate, 52.24%, and there we go. This is the improvement by going from something that was familiar to something that was unfamiliar. But let's go a step further. Let's try this strategy over the last 6 months, and let's see if the signal strength has degraded much like the signal strength did in the naked long call. And we can see that it has. Let's pull up the Excel spreadsheet. The average return has been cut in half, from 11.95% over 3 years to 6% in 6 months. Let's fill it in and then figure out why. Now we have evidence again that the signal from a pre-earnings trade is degrading over time. The market is picking it up. We will show you exactly how the market has picked it up, but first we're going to show you how to correct it. Let's now go to the Save Backtests and do the pre-earnings diagonal, but with our return distribution characteristics AI, with our artificial intelligence layered on top of it. We'll load the strategy. We'll go to the NASDAQ 100 and we'll look at the last 6 months. And look at that. The signal strength has come back. We'll go to the Excel spreadsheet. There was an 11.95% 1 week return when we did the pre-earnings diagonal. That dropped to 6% over the last 6 months. But when we added our AI over the last 6 months, it actually went back up to 12.31%. Let's add these numbers in and go further. You'll notice that the win rate is significantly higher too with the AI. And just for good measure, we'll do 3 years with the pre-earnings diagonal and AI, and then we'll explain to you exactly what happened. So we'll just click 3 years and wait for the results. And here we go. Over the last 3 years with the pre-earnings diagonal with our AI, the average trade return is back to 12.36%. We'll put it in the spreadsheet. Notice the consistency of this signal over 6 months and 3 years when we're using our AI. So what explains this degradation? That the pre-earnings long call now no longer works, that the pre-earnings diagonal in the last 6 months doesn't work, but with the AI it does. Here's the secret. The truth is, we once pioneered a strategy that illuminated the world of options trading, a strategy so effective that it transformed the landscape. This pre-earnings momentum. The strategy found its way to even the heights of the Goldman Sachs sales and trading desk. While we can't share with you the research they sent out to clients without permission, what we can do is share what is publicly available, and that is our LinkedIn account. We can see the readers when we publish the research of the pre-earnings long call. Goldman Sachs, BlackRock, BMO, B of A, and then on another day, BlackRock and Goldman Sachs and BMO again. But as others replicated our methods for pre-earnings long calls, the edge faded. That's why we saw over the last 3 years, it was only a 1% return in the long call. And that's why over the last 6 months, the diagonal then went from 12% per week to 6% per week. But we've turned this challenge into an opportunity, harnessing the power of our proprietary AI. Now, we've not only reclaimed our edge, we have enhanced it. TradeMachine is no longer just a backtesting tool. It might look like it is, and it used to be, but it isn't. And it's my job to communicate this to you as clearly as possible. And that's why I ran through these backtests with you, and we watched the computations live. We're going to do it again in a few minutes, multiple times with other strategies. Okay, that's my job. My job is to show you this. It's your job to put in the effort. Today, we stand at the forefront of a new era in options trading. Our AI doesn't just replicate the success of the past. It's a beacon leading us to uncharted territories of opportunities. This is our safeguard. Our AI is our safeguard, ensuring that the unique edge we provide remains exclusive to us. As a TradeMachine member, you're not just accessing a strategy anymore. You're gaining entry to the inner sanctum of a trading revolution. The revolution is not just about staying ahead, but about redefining the lead. A revolution that is driven by domain expertise, mathematical expertise, trading acumen, gained through decades of experience, and most importantly, a revolution driven by a firm that sells to retail traders. This is where the future of trading is being written, and we all have the privilege of being a part of this journey. Now, let's go back to TradeMachine. The fourth upgrade to TradeMachine ties this all together and makes it incredibly easy to use. You'll notice there are now checkboxes available next to the backtests. So for every ticker that looks successful to you, you can click it like Apple and Microsoft and Amazon and Google and Pepsi and so on. You could just go down the list. And all you have to do now, you select the strategy from here, you select the portfolio from here, you check the ones you like, and you click a button, Add Alert. Automatically, the tickers I selected are entered. The strategy is entered 14 days before earnings with the stock above the 50-day moving average and our proprietary AI, in this case kurtosis, over the last year greater than 1. And all we have to do is click Add Alert. Now I have done the work already, and you are free to do it yourself. I just worked with the NASDAQ 100 and a few other tickers, and you can feel free to work with any group. You have all of these portfolios available to you, or any portfolio that you can imagine. You can create your own, as many as you like. Here, I will share with you the first 24 alerts of my 140 that create a diversified portfolio of option trades. It is going to be a group of tickers for the pre-earnings diagonal with our AI. And here it is, 24 tickers over the last 3 years with a 78% win rate and an average trade per week of 27.8%. TradeMachine members, I'm now going to give you these 24 alerts, and we have 116 to go. All you have to do is click Add Alert. Once you have the link, all of these tickers are in here. The back test is already saved. You just click Add Alert. You now have 24 alerts. Let's look at the next 120. Remember that we just did something that buys options. That is, it buys an option and sells an option, but it creates a debit. This strategy costs you money to enter, and therefore it is long volatility. And we did it for a strategy where the stocks have to be above the 50-day moving average, so that means they're roughly in a bull market. Let's look at something similar, but is in a bear market. We'll go to Saved Backtests. We'll go to Buy the Sell-Off. And we're going to do it without our AI first. We'll load a strategy. We'll go to Portfolios. We'll do the NASDAQ 100, and we'll look at it over 3 years. This is also a diagonal call spread, and the results are great. 68.7% win rate, 20% average return over a month. Let's enter those numbers into the spreadsheet. But let's layer our AI on top of it so that we have an edge which is impenetrable, cannot be copied, cannot be replicated, and that we own ourselves. We'll go back to the Save Strategies, which everyone has. We'll go to Buy the Sell-Off, but with our AI. We'll load a ticker, we'll go to the NASDAQ 100, and we'll do it over 3 years, and we'll wait for the results. Now we see a win rate of 70% and an average trade of 25% every month. We'll go back to the spreadsheet. We'll put it in so we can do some comparisons. And here we go. It's a great strategy without our AI. It's an even better strategy with our AI. Our best guess is this edge will be removed from the market as institutions copy our research. Institutions will be unable to copy our AI. It is not reverse engineerable. Okay, and as I went through these tests and I checkmarked the ones I liked, I came up with 28 alerts. Let's look at those. 28 alerts, an 86% win rate, an average trade per month of 45.48%. These 28 alerts go with the other 24 alerts that we had for pre-earnings diagonals with our AI. That makes for 52 alerts thus far. We have about another 100 to go. So far, we have looked at something that happens during a bull market, so the pre-earnings diagonal has stocks above the 50-day moving average. And we've looked at a buy the sell-off, which is a trigger, if you scroll to the bottom, that occurs when stocks have an RSI that dips below 25 and they're down on the day. So this would be for a bear market. We've taken a bull market and a bear market. Both of these strategies own options. Now let's go to getting short volatility. We'll go to the backtest, spread the sell-off. And in this case, we're not going to waste any time. We'll just look at it with our AI. We'll load the strategy. It'll load one ticker. We'll go to the NASDAQ 100 and we'll look at it over 3 years. And here are the results: an 84.6% win rate with an average trade return of 25%. And what is this technical open? When does this happen? It's when the stock is down in the last 30 days by 10% or more. So a stock is fully in a correction. The stock is below the 200-day moving average. That means it is in technical failure. And then we have two different measures of our artificial intelligence placed on top of it. This is another strategy for our portfolio of trades, which happens during a bear market. But this time, the strategy is to do a broken wing butterfly, which is to buy a put, sell 3 puts, and buy 2 puts. That creates a credit, which means we are doing a short volatility trade. And here's how the payoff looks. For this strategy, the current stock price is right here, this vertical line. If the stock goes up any amount, it's a winning strategy. The strategy does the best if the stock actually goes down. And then, of course, if the stock really falls apart, then there's a limited loss. This is a covered strategy. Remember, this occurs when a stock is already in a correction. So if it goes down a little bit more, it's the largest winner. If it recovers, it's a winner as well. As I went through these and checked the ones I liked, this is what I ended up with. We have a total of 60 alerts for this trade type, a 90% win rate, and an average trade of 43%. This is 60 more alerts to add to the 24 for the pre-earnings diagonal, the 28 for buy the sell-off, making 114 alerts. Now we have 2 trades in our portfolio that are long volatility. This one is short volatility. The last one, therefore, must be short volatility as well, and it is for a recovering market. It's called Fade the Dip, and I'll make things go faster now. I'll just show you the tickers that I chose. This is Fade the Dip. The tickers that I chose were 31, adding to our alerts that we already had, a 91% win rate, an average return of 39.27%. And how did I find this strategy? It's right here. Fade the dip with our AI, right here. And how did I know these tickers? I ran it over 3 years for the NASDAQ 100, and I checked the ones I wanted and clicked Add Alerts. The final upgrade to TradeMachine is the speed of the back tests. Members that decide to go annual will get a 5 to 50x faster back tester, so you can do exactly what we're doing together, just a lot faster. Now I'll go back to the slideshow. The goal is to have a portfolio of trades that historically do better at different times of market cycles in order to make the long arc of a trading career successful. That's profitable at least 9 out of 12 months a year. It's a portfolio that is immune to over-positioning in volatility, not too long, not too short. It's a portfolio and a career that pays the bills and then some. And it takes a process, which is a plan. We've shown you that with TradeMachine. It takes patience with the plan and with yourself. You have to provide that. And it takes effort. We've made the effort and the process a lot easier. TradeMachine can do these. You must bring the effort and patience as well. A trading coach can help with all of this, but none of it can be done without TradeMachine. And certainly none of it can be done, as we have shown, from a company that publishes research, unless there are algorithms, in this case AI algorithms, which cannot be replicated and will not be shared. Thanks for watching.